Since 2021, the European Central Bank has been flirting with the idea of introducing a central bank digital currency, otherwise known as a digital euro. Progress has been typically sluggish. After a 2-year investigation phase between 2021 and 2023, the ECB announced that it had entered the so-called preparation phase, with a decision on whether to go ahead with the digital euro to be made in late 2025, and its actual implementation to happen in 2028 at the earliest. However, late last week, the Financial Times reported that the EU was accelerating its plans for a digital euro in response to stablecoin legislation recently passed by the US, which European officials worry could reinforce the dollar's status as the world's reserve currency and perhaps even undermine Europe's monetary sovereignty. So in this video, we're going to explain what a digital euro actually is, how it interacts with the stablecoin legislation recently passed in the US, and whether it could actually help the euro usurp the dollar as the world's reserve currency. So the best way to understand the digital euro is to see it as an alternative to the current payment system. When you use your credit or debit card to pay for something, you're basically sending money from your bank account to the seller's bank account. This might feel like a simple instant process when you tap your card, but that payment has to actually be facilitated by a payment processor, which acts as a trustworthy middleman between your banks. The issue for Europe at the moment is that the continent's payment processing network is essentially dominated by American companies, most notably Visa and MasterCard, who process more than 50% of all card payments in Europe. The EU has been trying to nurture a European alternative for some time now, but this hasn't really worked, largely because Visa and MasterCard are protected by what are known as network effects. In other words, because everyone already uses Visa and MasterCard, it's hard for smaller upstarts to break into the market. Anyway, this is suboptimal from Europe's perspective. For starters, Visa and MasterCard's de facto duopoly means billions of euros are constantly flowing out of the European economy into the pockets of US corporations, and the two companies can charge ever higher transaction fees without any real threat of competition, which has become a real point of irritation for European retailers. Furthermore, the recent geopolitical tensions between Europe and the US have given rise to an anxiety amongst at least some European policymakers that Trump could leverage Europe's reliance on American payment processors to extract concessions from the EU in the future. This builds upon pre-existing anxieties about Visa and MasterCard weaponizing their duopoly, which became particularly acute in July when the two companies threatened to withdraw their services from online gaming stores Steam and itch.io unless they took down certain types of not safe for work content. The digital euro would essentially offer an alternative to this system. While there are still lots of details to be worked out,